Hello and welcome back to Coinscrum Markets. I'm thrilled to be joined again by Rupertus Rothenhaeuser, CEO at Crypto Broker. How are you doing, Rupertus?
I'm very well, Paul. Thanks for asking.
We've got lots to cover this week, as always. Lots of news going on in the crypto markets. A little bit of news from yourselves today, though, I saw. You've formed a partnership, or you've onboarded to act as a liquidity provider for BDEX, Stuttgart's digital currency exchange. Can you tell us more about that?
Sure. This has been a tremendous milestone in our organization and in our plan in becoming more of this. We are a regulated entity and we love to participate and partner up with other regulated entities. And the Stuttgart Digital Exchange has been at the forefront of creating this crypto regulated space in the German market. And when they were seeking for additional liquidity providers, we were honored to be asked, and of course we accepted. And it took quite some time to get the technical stuff done, but now we're live.
Yeah, absolutely. I see they've got some other good partners involved. I saw SBI mentioned, Axel Springer, Solaris Bank. So these are all very positive statements, I guess. And so is the exchange live now for crypto trading? And obviously, liquidity is key for any new exchanges are launching. You said you're going to be playing a key role there. And have they got other LPs on board as well?
Yeah, well, look, Stuttgart picked up this cryptocurrency subject already a few years ago. They started with the B2C angle on the Bison app, where they offered OTC transaction for retail customers into the crypto space. Now they rolled it out into a, I would say, more formal marketplace, being fully regulated by BaFin. So this is an extraordinary step, and I guess this is only the beginning, since I get to the point where I believe the BaFin, the German regulator, is getting more and more, I would say, warmed up with the cryptocurrency space, because I hear more and more information noise, which turns me extraordinarily positive that there's more to come.
Yeah, I guess looking back, there's been maybe mixed messages out of Germany. Very early on, it looked like a positive jurisdiction to start crypto businesses a good number of years ago. I know some early exchanges, I believe Kraken, they had banking relationships in Germany. So everyone thought it was going to be a very kind of welcoming jurisdiction. I think BaFin over the years kind of flip-flopped a little bit. They've exercised a bit more caution at times. So what does this mean for Germany now as a whole? I mean, you guys based in Switzerland, I guess, have kind of jumped the gun versus many other European countries. And, I guess there was a similar relationship when the SIX exchange launched out of Switzerland a while ago, a couple of years ago now. So does this mean Germany's back in, and are they kind of fully behind the industry now? And is this going to be pulling in more companies into setting up in Germany?
I honestly believe that is the case, Paul. If you look at it, we are driving, of course, we are Swiss domiciled, we are Swiss regulated, but look, we cannot survive this enormous business growth by being just domiciled and focused on the Swiss market. So we do reach out into other jurisdictions. Germany, simply by size, nature, financial strength, is an extraordinarily exciting market for us. And I must admit, BaFin has been, they looked at their options quite carefully, I would say, to formulate it moderately. But once they go for something, they're really into it. And I have heard a lot of initiatives from e-brokers, neo-brokers, who have a very, very tight dialogue with the regulator in order, what can we do, what does it need, transparency, security, licensing. So my feedback from some of the big, large broker representatives say, I've met with BaFin, we've discussed it, and they're more than open to it, because they see the need of a crypto space as an element when reaching into central bank digital currencies. They are really looking into it from a very top-down approach and see how does it all fit together, payments, retail, institutional, and so on. And I'm extraordinarily positive on BaFin, especially on the crypto space. And their opinion about securities was always clear. I mean, securities need a prospectus. You cannot change securities law by issuing a securities token. It does not stop you from providing the adequate legal documentation and prospectus. So I'm actually really positive on the German market.
Yeah, I guess they had I mean, throughout last year, we saw the launch of a number of exchange-traded products on Deutsche Börse's Xetra exchange as well. So I guess that was sort of some training wheels. It wasn't direct trading of crypto, but all of the market makers of those instruments and the authorized participants, were having to, rebalance all of the, all of those products. So hopefully that, I'm guessing that gave them some level of comfort that the broader market was liquid enough to support it. And now we've taken that one step further where you've got regulated exchanges, liquidity providers such as yourselves, all regulated, and that's creating a really solid and strong ecosystem.
And Paul, you always have to take the client and the bank into account. I mean, some banks simply do not want to get yet involved in wallet management, key management, direct access into crypto, fiat payment into crypto, and so on. So the likelihood or the easiest access for financial institutions with large private banks, wealth management, and retail flow is going via a securitized product. So the 21 shares guys, all the ETN, ETP, and ETCs, the Fontables issuing structured products, they simply used existing processes because it needs a bank to service the flow. They need to be reconciled, they need to be risk managed, and suddenly the position somehow needs to appear in a customer's portfolio. Now, if you go the direct wallet key crypto route, it will be difficult for a banker to see, well, what is Paul Gordon's position now? Is he long? Is he short? How do I tell him what he has and what capital and risk requirements does he have? So using the alternative route via the structured products and ETNs and ETPs is a very smart entry point. Then you can still look and try and error and see, okay, now I can use my existing infrastructure. A security is a security. It goes the same process. It applies for the same rules. And if I then found more interest by people saying, yeah, it's interesting to own a certificate, it's interesting to own a structured product, but I want the wallet, I want the key, and I want the crypto myself in my account. Now that is then the next step, and that's what currently comes, and that's why Börse Stuttgart initiative. Today, I don't know if you've ever seen the message, Trade Republic, the biggest growing online neo-broker in Germany, and announced today that they allow crypto trading for their hundreds of thousands of retail customers in Germany. So this is the next step. It will come. And Trade Republic is a BaFin regulated entity. They would never enter into that space and that step without the approval from BaFin.
Yeah, yeah. And I guess maybe they drew, I noticed again in the news today or yesterday, maybe BaFin drawing another line in the sand around security tokens, actually, that you mentioned. They made some comments about the news from a couple of weeks ago that Binance are launching various products around tokenizing equities. So it's interesting that, that's obviously not a German domiciled company, but potentially has German customers, that they're making it clear that, these rules need to be followed. That's been very clear from all regulators that securities are securities, full stop. So will the Stuttgart exchange be able to, are they thinking about the security token side of things as well? Is that something they're going to be listing, or is that down the line?
I would be extraordinarily surprised if they wouldn't. I mean, it is for fact, this is one of the benefits of security tokens and the use of DLT and blockchain. You don't want to have the hassle of bond issuance, equity issuance, corporate actions, settlement trading. This can all be done a lot more easier, more efficient, cheaper, and more automatic by using smart contracts and securitized tokens. But a security token is a security, so all the regulatory rules apply. You cannot simply offer a security token without a prospectus. It doesn't work. Now, in this particular case, from the product that is in discussion right now, where BaFin did an unfavorable announcement yesterday, is it depends as well if such a product is distributed publicly. Is there a prospectus required? If it's only an OTC contract, if you would argue that you only swap the performance of a stock into a smart contract, does that mean that the token is a security token, or is it something different? Now, this is very much going down into the nitty-gritties of securities law and the derivatives of this security law. How do I read it? How do I interpret it? And it will not be the last case where people will debate, is this white, is it black, or is it somewhere gray in the middle? But the future for sure is, and the initiative with 6 digital exchanges in Switzerland is equal, the emerge of security tokens, the securitization, tokenization of classic assets will come. And there will be a market, and there will be a market maker required, and there will be systems required. And since we are licensed as a security broker in Switzerland, we are not only qualifying ourselves for market making cryptocurrencies, we could become a market maker on security tokens as well, the moment the regulatory umbrella allows it. So we are prepared, and hopefully, I'm pretty sure that Stuttgart is thinking the same direction.
Yeah, well, it all seems to be happening in Europe this week, actually. We'll move on to some news over in the US. But I mean, the other notable news this week was that the European Investment Bank is issuing a bond on the public Ethereum blockchain. So, you know, roll back 3 or 4 years, it was, you know, private blockchain, public blockchain. Banks would never touch the public blockchain. Here we are already, Goldman Sachs, Banco Santander, Societe Generale, all overseeing the sale of a bond on the public blockchain, Ethereum's public blockchain. I mean, that's pretty significant too, no?
Awesome performance, and I must say congratulations to everybody involved. And it shows one thing that we have been debating before, Paul. The question is, what blockchain protocol at the end of the day will win? Is it Ether? Is it R3 Corda? Is it digital asset? Is it DAML? What is the right protocol? Some companies have decided for one solution, which means they exclude themselves and the clients from other solutions. Well, first of all, this is the first of its kind where a consortium of many banks with an issuer form an alliance, settle the trade with digital currency on top of it. I mean, this is the guinea pig of the future. This is really the blueprint. Now everybody can learn to copy, paste. If you want to use it on the Ethereum blockchain, this is exactly how it works. Now, does that mean there is a regulated exchange involved yet? No, it's not. It's a very closed end shop from a couple of market makers and a blockchain provider. The next step is that, first of all, you need an exchange where this thing can be traded secondary market, and the more important step is you need to be able to do interoperability, because you cannot say, I can only do Ether, I can only trade on exchange A. Oh, you do R3 Corda, then we can only trade on exchange B. One day there will be an interoperability where it doesn't matter on which protocol your coin or your token is issued. You must be able to swap it from one place to another, crossing exchanges, borderlines, and regulatory hurdles.
Yeah, and I guess that will really just come down more to setting standards in terms
Correct.
of, you know, what messages include, especially what's essential and what needs to be included in any messaging across these different networks, but from a regulatory standpoint. There's the Ethereum options expiry on CME. There's some interesting stats around that on open interest. I mean, Ethereum's been very strong. It's been, you know, outperforming Bitcoin significantly throughout the year. And the recent sell-off, it's just bounced straight back and making new all-time highs. What's the options market telling us?
Options market looks extraordinarily exciting. There's a big expiry tomorrow, Paul. A record 4.2 billion ethers in options are currently the open interest, a number we've never seen before. And tomorrow only, on one day, almost 1 billion of those options expire. We have two extremes. On the one side, there's a large open interest in the 2880 call for tomorrow, and on the downside, for all those who believe the market might crash overnight, is an extraordinarily large position in the 2440 put. Both of them significant. I having seen the performance, I mean, the Ether drop on the 17th, only 12 days ago, where almost 17 billion in total value were knocked out overnight, and it went straight back up. And I guess the reason why it went straight back is because the Ether just reported that they currently hold 54 billion worth of assets on their chain, which is just a tremendous number. If you consider every one of these transactions is paying gas to be transacted, these guys are suddenly making serious money. So the value of Ether is actually explainable. It's not a speculative thing anymore. It's actually really becoming a business.
Yeah,
tremendous numbers. Yeah.
But yeah, the miners are doing well, definitely. As it's definitely positive times for all crypto proof of work miners. I did notice that on the Ethereum network, they've raised the gas limits. So there was, the problem had been about the cost of the transactions fees, especially if you're trying to use some of these decentralized exchanges, is something that's needed to be addressed. And that's already actually had a significant impact. I think it's kind of brought the average gas fee from the recent weeks down by half. So
yeah, exactly.
There still needs to be better longer term solutions. Obviously, they're working towards it as they move to proof of stake, but all good signs. Maybe Vitalik knows something that the rest of us don't, and he's
in
on those calls.
Exactly, and in the slipstream of the increasing Ether performance, I mean, all the other producers, Uniswap, Maker, Compound, they are the biggest contributors of assets into the Ether chain. Their prices moved nicely up as well. So looks quite healthy. I would be more on the 2880 call side tomorrow, not on the 2440 downside.
Okay, we'll have a €10 bet on that between us.
Okay, done.
Sorry, €10. Why am I even talking in fiat currency? 10 bitcoins.
Yeah.
There we go.
10 bitcoins. Yeah, make a big one.
Excellent. Okay. All right. That's enough on Europe. We've covered a lot there. Good snippets of news over in America as well, which are very positive. Well, one, I'm not sure we need to dwell on much. We touched on exchange traded products in Europe, and there's a whole swathe of them now earlier in the conversation. It seems like Groundhog Day. We've got another application just been delayed for an ETF in the US. I know it's I'm not sure what episode, what number application this is from VanEck, but they've had one underway. SEC have pushed back and used their right to delay that review process. Is that going to happen this time or not? Simple yes or no.
No.
No. Okay.
My best guess would be no. I would really love to see it happening. And part of the reason why the American regulators are so restrictive is an ETF has been emerging out of Canada, and they raised $1 billion in the first 10 days of appearance. I mean, there is demand. I honestly do not understand why it's not happening in the States. Yeah. There are qualified enough people. All the big investors in the space, in the crypto space, sit in the US. All the big corporates, all the big hedge funds, the big market makers, Cumberland, Galaxy Digital, CMT, you name them, they're all sitting in the States. I have no idea why the regulatory framework is so resilient in letting it go. And even the only existing future exists on CME. So they have all the elements of making it safe, trustful, secure, and profitable. Which is a very unusual combination of all of them. And it still doesn't happen. And I have no idea why. I have no idea why.
Well, let's see. Some people might be waiting to see what President Biden does with capital gains taxes. People might be looking to move out of the US, but maybe there are some other positive pieces of news there which might support the case, if not this time going forward. We'll finish up on those two. JP Morgan, doesn't need saying, fabled for being rather negative about Bitcoin, or their CEO, Jamie Dimon, a few years ago, made very disparaging statements. They seem to have gone full 360. There's been various pieces of news around their pivot back towards Bitcoin, or towards Bitcoin in the first place. Now, in the last week, they announced they're going to be, based on client demand, launching a Bitcoin fund. So is this going to give regulators some insight into what the demand really is?
As I said no in the previous question, now I say yes, this is exactly what's happening. And we see it as well here. Our clients demand crypto exposure. And they want it either direct or via a product. If same story, what I've just explained with the Germans and these exchange rate products listed on Xetra or the Stuttgart exchange, is the same applies for funds. We have our own long-short algorithmic fund issued, and we distribute it. So yes, this is an extraordinary step forward. I think Jamie Dimon never was that skeptic about Bitcoin. I mean, if everybody says, I don't really see it, well, you don't want to be the only one saying, yes, I really believe it's great. So you have to play your cards a little bit. But they were the first ones with the JP Morgan coin making interbank payments moneyless, I would say, digital. They were the first ones having the Quorum blockchain protocol, using it for internal process optimization. They've been extraordinarily close to the Ethereum Foundation. They always were in contact with the space. So them now saying, I want to issue a fund, or giving my investors the opportunity to invest in a classic product, not managing wallets, not managing keys, a simple icing code visible in your portfolio, is a tremendous step. And I think it's the same. Look, if you go through the news over the last, I would say, 8 weeks, Northern Trust, Fidelity, BNY Mellon, JP Morgan, Morgan Stanley, SocGen, Santander. What else do you want? I mean, this is the proof. This is the proof of concept. This is not anymore there's a small little bank somewhere behind the trees who's trying something modern and new. No, it's the biggest high street bank, financial markets, Wall Street houses who are not only considering, they're doing it. And this is a big change from, let's say, 12 months ago to now. It has been proven that the demand is there, the asset class is set, people want it, and it's never going to go away anymore. It might evolve, it might change, but the asset class of crypto and security tokens and tokenization will not disappear again.
Yeah. Okay, just finish up the last bit of news, which is, I guess, supporting this positive position out there, hopefully driving it. Brian Brooks, it's not his first role directly in crypto. Brian Brooks, well known, formerly being headed up the office of the comptroller in the US. He departed that role and moved to Coinbase, and now he's taken on the CEO role at Binance US. That's a bit of a statement as well. And if you want to make sure that, gamekeeper turned poacher, and if you want to have the direct ear of regulators and for them to kind of, maybe have a trusted voice within the industry, it probably doesn't get better than that.
Great step, and another proof of concept that this is exactly what needs to be done. I recall 20 years ago, 15 years ago, Goldman did a similar step. They were always the bad guys in the financial markets, and the press was beating on them every time something happened, may it be commodity trading, food for whatever. It was always Goldman's. Suddenly, they got more and more people in the organization from the regulatory side, from the political establishment, and suddenly it worked. They disappeared from the bad press, and they suddenly became the good ones. And this is exactly what is needed. You need people who can combine financial markets infrastructure, financial markets skill, together with regulatory and legal skill in order to make it happen. One is as important as the other side, but it only works if they work together. Mm-hmm. And that's why I'm not pessimistic that the ETF in the US will never come. Mm-hmm. It just appears to me they might need a bit longer than we all hoped. But I find this move extraordinarily smart. People with regulatory background in the industry can only help.
Yeah, it's all good. Well, we've covered lots of stuff there. I'm sure by the time we next have you on, there'll be a whole bunch more to talk about. But
absolutely.
As always, Rupertus,
thank you.
Pleasure having you on. Thank you for joining us. See you again soon.
Thanks, Paul. See you again.